And our next speaker is Mr. Srinivas Jain. Mr. Srinivas Jain is an Executive Director and Chief Marketing Officer of SBI Mutual Fund. He has over 26 years of experience in financial services, which around 20 years has been with asset management. Mr. Srinivasan has been associated with SBI Fund Management since 2001. Prior to which he has been associated with Birla Sun Life Asset Management Company and Kotak Securities Limited. He joined SBI Funds Management in 2001. He is overall responsible for strategy, global business development, product development and technology, and digital initiatives for the organization. Mr. Srinivasan was awarded as the Digital Marketer of the Year, Personal Finance and Investment by IAMAI and Money Control. He also profiled among top 25 marketers in the recent released coffee book table, The Inspiration Code. Mr. Jain.
Thank you very much, Ji, and thank you for welcoming me on this webinar. Thank you, Manjit, and also thank you to respected Premchandra Ji, Honorable Parliamentarian, to be on this webinar. Before I start off and talk about my points on financial services and product innovation, a quick disclaimer: my company needs to say that all the opinions that I give here is largely mine, because we are an asset management company and we manage money of people. So that's very important to say that there is personal opinion versus professional company's opinion here. Even before I talk about financial services and the impact COVID has had on it, and what are the challenges and how do we innovate from here, it's very quickly, I thought I'll talk 2 minutes about what do we do. So I'm an executive director at SBI Funds Management. We are the largest investment manager in India. We manage $137 billion worth of assets today across various equity, fixed income, debt, global assets. We've won various awards and recognition for performance that we have done. And we are also one of the first fund house in India which have been pushing what is called as ESG, environmental social governance standards in India. So the companies that we invest, we want them to be best in ESG, and that's framework is now becoming more and more critical in the post-COVID world. We also manage, have a huge responsibility, not just managing money for retail and institutional customer. We also manage the employee provident fund money in India, both the equity and fixed income side. And one other thing that is we are very, very proud of is we are the largest ETF provider of Indian ETFs globally, more than 1 lakh crore worth of ETFs that we provide for us. So now, one of the main things that I wanted to talk about, and the subject is, what is the impact of financial services in this post-COVID world? And what are the product innovations that are happening in the financial services business? Now, just before we talk about what is financial services, I just want to give you financial services is much very large business terminology. The biggest chunk of the financial services is the banking industry, or what we call in our parlance as BFSI, banking financial services industry. There is banking, there is insurance, there is asset management, there is payment. So it's a fairly large industry. But one thing that we all are proud of in the BFSI industry is that today, despite the way that COVID has impacted so much of business, banking industry and all the BFSI industry has been operational from day one. It has not, impacted the industry because of the way the industry is designed. Most of the services, whether it's my own parent bank, State Bank of India, or any other bank, have been able to keep the operations running despite social distancing issues, despite technology issues, despite issues with servicing remotest corner of the country. So the big thing that we are all now very proud of in the financial services industry is what we've been able to do in keeping the businesses alive and floating. And this has helped everybody else around us, whether it's the people who borrow from us, the investors who've invested with us, all of them are much more satisfied. If we were also to go the way some other industries like airlines, hotel have gone, it would have been a big disaster for the country. So that we are very proud of it. Second, most important thing is financial services actually reflects the economic status in the country, the economic activity in the country. So when you look around us, everything that happens with economics actually reflects in the way financial services industry work, right? So the financial services industry is, like they say, a barometer of the way the economy is. This time around, there has been a big shock for the industry. It's usually when we get into recession, it's either led by some supply side issues or demand side issues. So here we've had the supply side issue, and COVID has created a demand side issue problems also. So it's like a double whammy for the business. And for the financial services, the bigger issue has always been that big impact industries, and some of them are like the hotel industry, we'll hear from them, they are a high touch point industry. These high touch point industries are actually the worst affected industries. Hotels, airlines, real estate. These are the industries today which are really struggling, and they will take fair amount of time to come back. They have actually a big issue. One issue is that they are always going to be an issue because they are low margin and high working capital kind of companies. Whether it's SMEs, whether it's these industries, because of the high competitive nature of the industry, they've always been hand to mouth kind of industry, and that is something that's got to change post COVID. How people can shore up better margins, and more importantly, have better working capital requirement to run the business. So access to capital is become very important for them to stay afloat, and this crisis has actually created a lot of problem in terms of access to capital. Right? Basically, we expect a lot of defaults to happen in the short run. Government has already made a lot of changes to the NPA regulations. There have been some relaxation. We've also seen a very big moratorium that the government has announced. But the key question to ask, which today we are really not aware, is that how deep is the health crisis and the government containment measure? How it will affect the economy and in turn affect the banking financial services industry? Because as the economy deteriorates, the BFSI industry also will deteriorate. One of the bigger issues that we were facing coming into COVID was the non-banking financial services. The non-banking financial services always had this liquidity squeeze. We had this ILFS episode in 2018 November. Ever since that, the NBFCs have actually been in a really bad shape. Now, banks have been one of the big source of capital or liquidity to these NBFCs. And if banks are also getting into trouble, then you will have problem, and you had this issue with Yes Bank, you will have trouble, which is a double whammy, which is not only bank will create issues, it will create issues for the non-banking financial services because they have been dependent quite heavily on that and the liquidity that the banking service industry creates. And then, of course, you have the whole shadow banking industry, which again is dependent directly or indirectly through how the NBFCs and the banks react. One other bigger industry which is now becoming very large is the fintech industry, which is a relatively very small, but the fintech industry was here to stay. A lot of disruption that they were creating. Now they have got into trouble because most of their growth capital came from sources either in India or outside India, and those sources are very quickly drying off because their money were coming to acquire customers for the fintech businesses. Now they are under trouble because again they were also living with all this growth money, and that growth money is kind of drying out. The good news is the 20 lakh crore package moratorium that has been given is actually a significant number, and as our honorable parliamentarian said, a lot of that money is actually going towards debt servicing for SMEs and smaller smaller companies. So this is actually a good news because this should help some of these guys to stay afloat. The good news is that the government, RBI, has also extended the moratorium now till August, end of August. So this will give some more relief, even though economy is now opening up. This will give us some more relief as the industry opens up. The government response, according to me, is largely more about the Jan Bhi Jahan Bhi kind of a very short-term approach. What really now needs to be done by government as we go along, there have been some talks on labor reforms and others, and some states have actually moved, is the big bang reforms that is needed for us to take advantage and the growth that is likely to come post the COVID scenario. Because if you don't make those investments, you will have issues with joblessness, and that joblessness is going to create more and more problems to the economy. Broadly, I think there are about 4 key challenges for the BFSI, banking financial services industry. The first challenge that I talked about is actually the credit challenge, right? The cash flow of many customers and businesses have actually collapsed. There is a lack of demand. There is a low business revenue. Employees are being laid off. This in turn will create a lot of increase in both commercial and retail non-performing assets. Most of our borrowers are struggling to make scheduled interest, principal payments. There are, however, some steps banks are now taking to mitigate that, and potentially they will emerge much more stronger post this COVID. Basically, we have to support some of these government initiatives that the government has talked about. We have to, help the forbearance and modification programs the government has told. Prepare for losses, which is the big issue, right? Banks will now have big NPA. We'll have to prepare for losses. Extending of credit with this moratorium is one way, but banks can do their own way of extending credit. And most important is to digitize and manage the demand of refinancing. And this is very critical in this current environment. The second biggest challenge that NBFC today are facing is largely revenue compression. I think it's a big issue because one is to stay afloat. Second is to stay afloat with making some money. In the last few weeks of the pandemic, the banking industry is actually, their market value has fallen. You might have seen the Nifty, bank Nifty has compressed. It's bounced back a little bit recently, but it's actually gone for a toss. So the access to capital for the banks have come down. And this is a bigger issue. Low net interest earning margin is a big issue. Drop in payments, repayments are a big issue. Decline in trade finance and cross-border trade, which is again a big issue which not many people have talked about, which is going to hit the financial services industry. The third thing that's going to come and will hit us as we go along is the customer service, which is the most critical thing. In the short term, the pandemic has, rapid changes in customer service preferences, right? Many banks have stayed open, like I talked about. We've tried to give our services. But going forward, we have to educate and train our customers how to deal in this post-COVID environment, because hopefully this virus will go away, but there will be some element of social distancing that will come. We have to minimize these physical infections, personalize advice to customers, and more importantly, support virtual SME relationship managers, right? Today, most of the banking is about physical contact, talking to people and getting things done. That has to change. And of course, that will mean accelerating digital sales and services. And the fourth model for us is most about cost control and innovation. I think the bigger problem with all of us today is that capital may even come, government may pump in money to the banks, but if cost controls don't happen, if you don't look at reviewing projects and expenditure, it will be a big issue. We have to be flexible with our vendors and suppliers. At the same time, we need to invest in projects that will outlive the virus. That's the key thing, right? If you are investing in something which is short term, you have a problem. You have to invest in something which is a little long term in nature. The good news is all the money the government is doing and investing will go into large fiscal expansion. That will be a big investment into the economy, and that should really help. In fact, the good news has already started coming. The SBI results, which came in last week, 2 weeks ago, actually talked about only 20% of our borrowers have actually taken up the loan moratorium, which means that the people who are struggling are not so large compared to what it was originally estimated, right? The credit card companies are seeing some better numbers than what they actually thought through. And there are lots of silver lining. There is now a feeling in the last 1 week or so that while we have got into recession, and the recession is definitely there, but the recession actually, because of the nature of recession, normally these recession lasts about a couple of years. This time, I think because the nature of recession is linked to COVID and not to any large fundamental problems, I think the nature of recession will be actually short-lived. I think this recession will be much shorter. Then that means the bounce back that can happen is also going to be stronger. In fact, you must have already heard what S&P, which talked about just 2 days ago, that they feel that next year, FY22, will actually see 8.5% growth in the economy, because the pent-up demand and the post-recession world will actually do now. The next good news is that employment number, which was looking very bad, is now started actually looking up. I think in the last couple of weeks, I think there have been good, numbers on the employee as the economy opens up. I've actually got a neighbor who's a builder, and he tells me that he's actually flying in laborers from Bihar to Mumbai for their project. So it's it's actually good news that the one laborers are ready to return and the companies are doing anything to ensure they come back. And I think the more we look at it, the industries have started living up with the virus, right? There is no option. It's been now 3 months. We've realized there is an issue. Industries have quickly understood that they have to have the social distancing down, find ways. Indians are known as the Jugaad generation. So we know how to manage these things. I think the new industries have started looking at it, and discretionary expenditure obviously is going down, which is a good news, right? Just before the conference started, we were talking about it, saying that investors, companies will start looking at more focused around how do you keep businesses alive, how do you keep margins intact, rather than spending money on discretions, right? Another good news that came just a couple of days ago, that we don't have at least a forex challenge like we used to have in the past. Every time there was a big problem in the economy, the first thing was we had to have a forex challenge. This time, despite having all the issues on the non-resident, our forex reserves have actually gone up. We have now a $500 billion record forex reserves, which should keep us alive, especially in this new trade war that is likely to come up in coming days. Also, the good news is the power consumption, steel industry opening up. These are all very heavy duty industries. These things have started looking up. One other thing I think which government wants to do, which is the Swamilaban part, which is basically the supply chain disruption that's happening globally, as actually giving, and the anti-China sentiments that's there globally, is actually giving a lot of opportunity for made in India. Actually, Bradley kind of talked about it. We actually have this India-Australia strategic tie-ups, and there is a lot of these things that the government is trying to do across the world. Industries now need to take advantage of this. Governments need to bring stronger policies to make that happen. And that's very, very important. And the most important thing that I think is a silver lining is the prospect of an early vaccine. I think if you have an early vaccine coming up in, let's say, November, December this year, I think this we will look at it as a bad dream, 2020, and 2021 will start thinking about as an industry, as something that we will all be very happy about. Few things that the industry is already doing and we need to do more in the BFSI is digital adoption. One good thing is that Indian banking financial industry has been a very high digital adoption. We were very early, thanks to fintechs, thanks to bank going digital, thanks to access to internet. This has really worked. So remote working has been possible. If this had happened 4 years ago, it would have been a mess in India. Thankfully, that's working. Contactless payment, credit card, e-commerce adoptions actually are helping. And we are now helping our customers deal with new technology initiatives. I'm sure we're going to hear more about that with speakers. But machine learning, natural language processing, predictive analysis, machine vision, all of these things are actually helping even the smallest of smallest companies live up to giving better customer experience, good products, and distribution. Also, finally, we at SBI Mutual Fund, I wanted to give a couple of things that what we've done. From day one, we've never had an issue with disruption, thanks to the digital adoptions, right? So ours is a very, very time-sensitive industry. We need to invest in the market. We need to give returns to our customer. We need to ensure processing everything happens on the same day. So we've never had any delay in our processing, while 100% of the company worked from home for a fairly long period of time. Only in the last 1 week or so, we've started opening up and started coming on board. We've got all our employees to invest from home. We've got our partners and distributors. We've empowered them with their financial, with all the tools that they need to work. We've extended them opportunities to work, given them, enough scope to reach out to their customers, to do their servicing. We've had multiple webinars, and this is now a big issue. I do this now on Sunday, Saturday, every day, multiple webinars, not just talking to our investors, but talking to our employees, talking to our channel partners, talking to our vendors. So our touch points have actually gone up significantly. I think in a pre-COVID world, we wouldn't have done so much of contact program today we are doing, because it's possible to sit here at home and make all of those stuff possible. And also investing in infrastructure, the cloud initiative that we have done. All of this actually is helping the financial services industry, which is now going through a very bad pain. In fact, the worst industry today to be hit outside an airlines or a hotel industries, financial services industry. But it's also one of the best industries because we innovate, we have the digital services, we have ability to come back very quickly. And thankfully, I think government and other regulators are actually helping us stay alive and stay afloat. Just before I close, and I've already taken enough time, I wanted to leave you with a thought, and this is something that I always talk about in terms of an opportunity. And this goes back to an example that happened in the pre-Americanization, when the Europeans actually went to America, wide, vast land. The land was open, but there was nobody except Red Indians. So the early guys who went to America actually went and wanted to settle there, but they had a lot of problem because these Red Indians actually did not let them settle. So the early settlers actually decided that we need to do something about it. And of course, those were cruel days. They said, okay, so every Red Indian head you get, we will give you $1. So that was the, that was what the government, the settlers, the American settlers those days did. So there were two young entrepreneurs who actually went from Europe to actually make money by, getting rid of these Red Indians. So when they went to America, initial days they killed a few Red Indians and made some money. And one day they were, all these Red Indians were very unhappy with them. So they said, these two guys are creating a lot of problem. We should get rid of these two, then not Americans, but Europeans. Their name was Joe and Harry. Now, Joe and Harry, actually, America is a vast land. Joe and Harry were actually sleeping in a camp one night, and more than 1,000 Red Indians surrounded the camp. Those Red Indians are very, crazy people, red-faced, paint, there's tomahawks, and they scream and shout. So they came screaming and shouting, thousands of them screaming and shouting outside the camp to kill these two, Joe and Harry. Now, Joe woke up, went out, saw all these guys coming and attacking. He went and woke up Harry. Harry, wake up. There is $1,000 outside. So when I say the joke obviously is a joke, the joke is all about seeing an opportunity in a threat. And that seeing an opportunity in a threat is very important for every industry. And COVID is actually a good opportunity for us to kickstart our business. Let me end my talk here. I'm happy to take questions when there is a time. Thank you very
much. Thank you very much, Srinivas Jain. And hope, as you said, actually, let us hope for a vaccine to be invented soon and be erased 2020.
Seagull International Human Resource Consultants. Bridging the gap between dream and reality.